Holy smokes, everyone. We have some breaking news that another US major bank has just failed. They tried to tell us that the banking crisis was over, everything's fine, but they're keeping this hush hush on the down low. This happened out of nowhere. There was no warning this was going to happen. They didn't want the public to know about it. And guess what? I have some leaked footage from the FDIC themselves saying we should not tell the public about how bad the banking sector really is, because it's going to cause panic, cause fear, and it's going to cause people to lose trust in the banking system. Because guess what? That's all the banking system relies on is trust. There's only 5 to 10, maybe 15%, if they're lucky, of cash reserves in the bank. If just 10% of people go ahead and try to withdraw their money at once, the bank will completely fail. Now, I know what you may be thinking, but Michael, the market went up today, only by just an inch, Biden would say. But we're not talking about the stock market. The stock market and the banks is completely different. So everyone, what bank failed? Why did they fail? And are there more bank failures coming? Well, that's exactly what we're going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, now first things first, before I get into what bank actually failed, you need to see this leaked footage from the FDIC meeting telling them we do not want the public to know about what's about to happen. And guess what? This meeting was in November 2022, right before the huge banking crisis that we saw this year in March 2023. This happens time and time again, everyone. They know exactly what's coming. They try to keep it hush hush, and then a few months later, it eventually happens. So everyone have a look at this shocking clip, and then we're going to get into these news stories.
A professional need to know. I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do, that we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that will charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Did you hear that, everybody? This is absolutely insane. These bankers, the FDIC, they're having these closed door secret meetings. They're saying, look, the people have more trust in the banking system than we do. Those poor peasants, they don't even know how bad this banking system is. But these large institutions, they sure know how bad the banking system is and how easy it can go under. They have a lot of lawyers, a lot of very powerful lawyers, a lot of very intelligent, expensive lawyers, so they can find out information well before the public finds out, so they need to keep this information suppressed. And you want more proof that there's absolutely zero chance the FDIC can cover if one of the big four banks collapse? Well, look at this, everyone. This is the FDIC's website themselves, and you can see here the deposit insurance fund balance was $116 billion on March 31st. They haven't updated this, so it's going to be very interesting to see what it's like now after all the bank failures, and that is a decrease of $12 billion from the end of last quarter. So $116 billion, that sounds like a lot of money, right? Well, actually, no, that's pennies compared to how much money is in the whole US banking system. Because look at this, deposits of all commercial banks is $17.3 trillion. So the FDIC's insurance fund is not even 2% of the total US banking system deposits. But people, if you thought that was bad, it just got even worse. Say, for example, you're going to say, well, look, okay, I'm going to do my research to see what banks have the most amount of uninsured deposits so I don't put my money in there and risk that bank going under. Well, guess what the banks just got caught doing? That's right, they were completely lying about how much uninsured deposits they had. Look at this. So that's right, everyone. FDIC warned bank after errors in reporting uninsured deposits. The Federal Deposit Insurance Corp said some US bank incorrectly reported the amount of their uninsured deposits after dozens of lenders restated the figures amid an increased scrutiny of such funds. But you know what, people? I'm sure it's just a complete accident. It's not a coincidence that they did this right when all of the banks that had their most uninsured deposits deposits saw their stock absolutely tanking. In recent months, 55 banks revised the deposit data disclosed in a regulatory filing known as a call report, according to an analysis by S&P Global Market Intelligence. In some cases, the banks no longer included certain uninsured deposits that were collateralized by pledged assets, as well as those held by bank subsidiaries, the FDIC fund said. But don't worry, they're really going to punish them for doing this, aren't they? So after the collapse of Silicon Valley Bank and Signature Bank in March, investors began scrutinizing lenders with biggest share of uninsured deposits. Because such funds aren't protected by the FDIC, depositors are more likely to withdraw in a crisis. So if a bank incorrectly restated the amount of uninsured deposits they have on their balance sheet, the agency says it's incumbent on the firm's chief financial officer or executive performing a similar function to submit additional revisions. So that's right, everyone. No fines, no compensation paid to investors that were completely lied to. Just go ahead and resubmit it again. I'm sure you're very sorry for making a mistake. Now, don't worry, after I finish this report, I'm going to go into that bank that just failed, but you need to hear this information first. So Bank of America Corp updated its levels of uninsured deposits by the largest dollar amount. I've been warning you, everybody, Bank of America, out of all the big banks, the big 4 or 5, whatever you want to call it, they're the ones most at risk. While Huntington Bank Shares Inc. restated it by the largest percentage decline. Earlier this year, we identified certain internal or intra-bank accounts that shouldn't have been reported, Bank of America spokesperson Bill said in a statement. The company doesn't plan to restate the figures again following the FDIC's letter to lenders. And of course, the spokesperson for Columbus, Ohio-based Huntington didn't immediately reply for message seeking comment. That's probably because they know they're in big trouble. So okay, we watched that leaked footage of FDIC knowing that the US banking system is a complete Ponzi and they don't have any faith in it at all. We've got this report now that banks aren't reporting their uninsured deposits, and we just got this news today that PacWest has failed and they've been taken over, and this just happened out of nowhere. Normally with all the other bank failures, you'd hear a few days in advance. It would be leaked out to the press, but this was kept very hush-hush. So let's get into this report. So look at this, everyone. PacWest shares absolutely tanked today, down 27%, and they only rebounded after this announcement. So PacWest agrees to combine with Bank of California. Now what you have to remember, everyone, if Bank of California did not come to the rescue, PacWest would have been finished. And who knows, maybe the US Treasury Secretary Janet Yellen kind of forced them to come in there and buy them in order to restore faith in the banking system. So PacWest agreed to combine with smaller rival Bank of California, an all-stock deal that would end the independence of a regional lender that came under intense scrutiny following the downfall of Silicon Valley Bank. And I try to warn you people that PacWest will go under. It wasn't a matter of if, it was just a matter of when. So the private equity groups Warburg, Pincus, and Centerview helped arrange of $400 million in new equity from investors as part of the deal and would own roughly 20% of the combined bank. The pact is expected to close in late 2023 or early 2024 if it receives approval from shareholders and regulators. So it's not 100% confirmed yet. Both banks serve wealthier customers in California, and PacWest is the far bigger lender when measured by assets. It was the nation's 49th largest bank as of March 31st by that measure, while Bank of California was the 135th largest. So Bank of California was able to buy out this much bigger bank when you look at their assets for pennies on the dollar because they were going to collapse. Now, many regional bank stocks turned lower Tuesday on the news of PacWest's sale, offering a new reminder of the industry's vulnerabilities. That's exactly right, everyone. Now, the Federal Reserve is almost guaranteed to lift interest rates again tomorrow. So that is going to mean interest rates on bonds are going to go up, and that's going to mean these assets that have these low interest rates are going to continue to fall in value that are on the bank's balance sheet. Listen to this, but many regional banks still face numerous challenges. Most attracted more deposits during the quarter by paying a lot more for them, cutting into key measures of profitability. Many also revised down estimates of future revenue or profits. PacWest, like many regional banks, spent much of the second quarter shrinking its balance sheet as it tried to keep its depositors. We're going to make sure that we look to avoid the concentration risk that I think all banks experienced over the last several years, Bank of California CEO said on a Tuesday call. Well, everyone, you know, I think it's going to kick off the next banking crisis is the commercial real estate crash, because that market is only getting worse. I think with artificial intelligence, I hope, you know, it doesn't go ahead and take a lot more jobs, but I think it's unavoidable. It will. That's going to lead to less and less demand from office spaces. As technology gets better, whether the executives like it or not, more people will work from home, and these commercial office buildings are going to absolutely tank in value, and it's already happening now. So everyone, I know you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? What this simply means is, unlike they're saying, the US banking system is not strong. It has not recovered. It is not over the banking crisis. At any moment, especially with Fed now, people can withdraw their deposits in seconds and cause a bank to go under. Like I said before, I think a lot of banks that have concentrated risk in commercial real estate. So you're going to want to check your bank to see how much exposure it has to commercial real estate will be the next to fall. So next what you're thinking, well, okay, how can we protect ourselves? Well, first things first, I'm having a 50% discount off my course on how to build wealth and master the cycles of gold, silver, and Bitcoin to protect against an economic collapse, but also a market melt up by investing in gold, silver, and Bitcoin. The course is almost 50% finished, and once we hit the 50% mark, once module 4 is finished, the price will be increasing. So again, if you want to check that out, link in the description. Now, it's not financial advice, but just what I would do. I would not have more than $250,000 in the bank, and I would not even have $200,000 in the bank because the FDIC doesn't have enough funds to cover it. So I have multiple bank accounts. So I have multiple credit unions in case one goes under. I have another one to go to. I also have a lot of money in gold, silver, in case things really hit the fan, in case things get really crazy. You've got some real hard commodities there, some real hard cash. There's been money throughout the test of time. And like what we saw in March during the banking crisis, a lot of people took their money out and stored it in Bitcoin because it is very hard to, carry around $1 million worth of gold. We can do that with Bitcoin when you take it off the exchange. Remember, don't keep it on the exchange. Keep it in a cold storage or keep it in a wallet that's not linked to any kind of exchange, and that way you can get out of the banking system. But everyone, what do you think about this? I thought this was absolutely crazy. Let me know your comments below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.